Hello and welcome to another installment in my weekly review videos. So this Saturdays are for reviewing the week that was. So we're going to review a few trades for the week ending August 7th, 2026. So just as a quick menu of the trades that I'm going to be reviewing. These are all trades that I took with the exception of Thursday. So Thursday was a hindsight. I actually had a loss on Thursday. I can go into what happened there, but overall pretty good week for me. Four green days, one red day, not too shabby. So Monday and Tuesday are gonna be crude, WTI crude futures trading. Then Wednesday was a multiple scalps, and I'll get into what PCRT stands for and what this scalping model that I'm kind of developing is all about. And then Friday I can break down in a lot of detail the NFP big win for Friday. I had two positions. I had a position in the euro and in the pound. So first, crude futures. So we opened the week, and I think due to rumors over the weekend of de-escalation of the war in Iran, there was a large gap down, like many round dollar, hundreds of points, we'll call it, and so you have the Monday opening candle, basically like opening low and kind of hitting that $80 per barrel even for the contract, and then just kind of like surging upwards. And then that initial candle, the opening candle, 6 p.m. Sunday evening there on August 2nd, that opening candle becomes this range. And what I'm expecting to see is a couple things. There's initially a pause CRT that you would expect to occur with such a wide range opening bar, and that's exactly what happened. So it takes 1, 2, 3, 4, 5, 6, 7 candles to have a pause CRT of the opening range bar. And so that 7 candles is my model, because my model is to look for from an origination candle, and I'm treating this as a swing low, actually, which it is a swing low. So the low's at 79.45, and so treating this as a swing low, this is the origination candle of the range, and then we stab into the sell side liquidity, and I'm getting long here. So I'm long in the morning, all the way through the NY session, expecting gap to gap, and then I'm pretty sure I had another long after the reopening of the futures market. I had another long scalp into the buy side liquidity up here. So this is your first gap to gap trade. In other words, this is a fair value gap, and this is a fair value gap, and that's why I have it labeled as Monday trading in the void, because there's a void up here, then there's a void down here, and you're simply trading an expansion pattern as we look to get we go from accumulation into manipulation. So Tuesday ended up being like the most important distribution of the week for crude. Tuesday, it was just like I was short crude, and I didn't expect it to rip lower. I don't trade the full sized crude contracts. I trade MCL. So like I obviously wasn't super levered up into this trade, but it was just it was a really, really dynamic move during the midday on Tuesday. But you can see that this is actually a model as well. So in other words, I don't have the time frame resolution to like translate it into like, you know, an 8-3 for you or a 10-3. But in other words, like 10 candles of accumulation into peak manipulation, and then, you know, the two or three candles into distribution. But yeah, it was a really brilliant another gap to gap trade where we went into the buy side liquidity, had a turtle soup, and then down lower. And this is just showing the higher time frame draw on liquidity that Tuesday's bearish trade sank into or stabbed into. Really insane vol suppression in mid-July there. So clearly, like many orders like resting within this within this fair value gap, which is also a daily fair value gap, higher time frame fair value gap as well. So yeah, very predictable that price would move into that after that development of that. You know, it's almost like the rumor, and then the rumor gets confirmed, and it's actually that it is a little bit of a bad news at the bottom situation. And I was actually kind of done trading with crude after this, because once you get into like the Wednesday and Thursday of an NFP week, my focus completely shifts to macroeconomics from the geopolitical catalyst to a macroeconomic catalyst. And so what I looked for is I wanted to scalp. I wanted to go into full scalp mode on Wednesday and Thursday with the Forex, and then just really acquaint myself with the pound and the euro to where I was able to get in there on Friday morning and capitalize on the big move after the NFP. So the idea is, this is basically trading news that percolated over the weekend and then culminated based on, you know, reporting and negotiations and all that. And then now we're shifting gears and we're looking at more of like now we're trading, rather than trading news that essentially like happened in past tense and then the market needs to like react to it fully as it like crescendos into like, you know, becoming fully confirmed and fully priced in. Well, this is a little different. This is more like you know that important news is going to drop. And so now it's the poker game of the market makers know what the outcome is. The retail traders think they know what the outcome is. And then let's just juke the market around and then get everybody out of position. And so it often gives you some scalping opportunities to trade. Now, this is interesting that you get, even though NFP, just as a spoiler, NFP was bullish, right? So for foreign currencies, you got your scalping opportunities on Wednesday to the long side, which was kind of interesting. You know, you'd expect like maybe a protracted manipulation period where you're accumulating bearish before the positive news, but it didn't quite work out like that. We had some bullish price action on Wednesday, but it was fairly easy to recognize. So tell you what, first I'm gonna go to my trading view, and before I get into what this is, PCRT scalping, I want to. PCRT stands for pause CRT. Okay, so in other words, it's kind of like the opposite of what I look for. I look for the 2023 model. I look for a range to turn into a trend and just like blast through the range, blast through an old range. Whereas PCRT is acknowledging that there will be a range and there will be accumulation, but scalping within that within that context on purpose. Like you're trading, so it's a little bit more of a nuanced approach. So what I'm going to do is I'm going to switch over to my browser to get to look at TradingView, and I want to show you how I knew that Wednesday was going to be a pause CRT day in both the pound and the euro. So the way you want to look at the way you want to look at pause CRT is obviously number one, vol is you're contracting vol. You're trying to accumulate orders, so you're trying to induce certain market participants into the market and like give them lots of maybe lower time frame entries to get in on a certain side, right? And the other thing the pause CRT does, so it accumulates, it culminates in a manipulation, right? Because the whole point of the pause, that's the 2023 model that I trade, right? And what a pause CRT does, because it goes so slow and because it's so hesitant, and giving lots of lower time frame entries and exits and entries and exits, what it does is it actually satisfies the requirement of market makers to fill internal liquidity. In other words, if you have a violent move in a certain direction, I'll make this like thicker, okay, and then you have a fairly violent move in the opposite direction, you're left with like a BPR, right? Like where this could be a bullish fair value gap, and then this could be a bearish fair value gap, and you're left with this overlap between the two that is essentially like a balanced price range. And from a market making perspective, if you want to go higher after this, what you need to do first is you need to go incredibly deliberately and slowly through all of these through all of this internal liquidity. You need to like slow the rate of the rate of price change over time. You need to slow that variable down, and you need to fill this in. So this is where you have a pause CRT. The other reason why you have pause CRTs is they're anticipatory. Like, in other words, NFP, Friday at 8:30, everybody's got it on their calendar, Forex Factory, red folder, right? It's anticipatory. So you have your pause CRT, right? And then you have an inducement high, and then you might have further accumulation into your pause CRT. I mean, there's many variations of this, but this is exactly what happened last week. And here I'll do it on the chart rather than drawing it for you. Okay, so we're gonna look at this chart. So this is the euro. This is the week open right here, and so on Sunday night, for we'll call it market making reasons, we make a real run for a key level, which is 1.15 even. We make like a really honest attempt to fill that, to hit that level. But what we end up having is, in the pound, we have a nice SMT, and I don't know if it's barrier options or what, but spot never hit that level. Spot never hits the round level. And then we get that after that violent. So we have this is like going to be a little tricky, but we were really bullish to close out the week of July. We were really bullish to close out the month of July. So if you look at the July, the last weekly candle in July, it was a huge bullish week because of the Fed, because of Kevin Warsh. So then you're expecting, because you have, and then look at what happened on Friday. Like they didn't even let. So you had Fed Wednesday, and then you had Thursday more expansion, and then Friday is like this like, oh boy, we better hurry up and like fill this internal liquidity. Like they didn't even let consecutive daily FVGs form. I'll get rid of that. That's in the way. And so you end up with this like big order block here, which is like this wick. Okay. And the Sunday trade, I'm not sure if it was like, I'm not sure what the, macro explanation was, but it's essentially like another attempt to fill in this. So if this is an order block, which formed on Friday, then we're stabbing into this order block. And we, to be fair to the market makers, we stab into the consequent encroachment of that down close candle, that fat down close candle. And so we get after that pretty violent move, we get a pause CRT, okay? And the pause CRT actually starts on Monday and on Tuesday and Wednesday. And I don't start trading it until Wednesday because I think that pause CRTs are so like chaotic. Like the thing about the distribution is the price has momentum behind it, but there's no momentum behind the pause CRT. So once it gets past premium, then I'm like, ooh, yeah, like now I'm not just trading a pause CRT from start to finish. I'm trading the kiss of death manipulation into some levels that I know would be important to take out in advance. So I actually took this in the pound, which was really nice. And I'll go back to my PowerPoint now. So here, and we'll switch over to we'll switch back over to the PowerPoint on the my stream software here. So what is pause CRT scalping? Well, I already talked about when you'd identify a pause CRT, and for me, the pause CRT was confirmed once we just grinded higher into the premium part of the range. So like this is a bullish pause CRT which has yet to reach completion, and so that's like the key is like you need to be confident that your pause CRT is going to work for like many different market context reasons, which in the case of this trade it was. And so here are two setups we got with the pound within the pause CRT. So what you do is, even though the pause CRT itself, I would consider like low probability, if you drill down within the higher time frames, you get high probability setups within the pause CRT because it's so start, stop, start, stop, start, stop. So this is this is the 2023 model, Romeo's 2023 model on the 15-minute time frame. In other words, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 15-minute candles. And it's within a kill zone. So the kill zones are important for pause CRT. Like you shouldn't be, because pause CRT automatically implies that there's not going to be a lot of participation and volume in the market. So what you're looking for is you're actually just trading these small little gyrations in the participation. Like you're looking to trade the pause CRT only during the typical kill zones of like the London Open, the New York kill zone, the 9:30 a.m., the 10 a.m. Options expiry, the London close, Asian Open. You could pick your kill zone, but just be sure because because it's easy to get whiplashed in a pause CRT as well because you're on the lower time frame. But anyways, this is a 15-minute candle model with a that took 10 15-minute candles to develop, and then you're expecting three 15-minute candles to distribute, which it did. 1, 2, 3 like this, and it distributed up into the premium of the range. So maybe a little slower. But then I was really using the minute chart to enter because of the SMT with the euro. And then again, you have another pause CRT. I think both of these were actually on Wednesday. And this one was earlier on, I think during London. And I'll show you on my next slide. And then this is the one within the 10 a.m. So there was actually a 10 a.m. news release that day, and a pretty good, so on the 30-minute chart. So this is like a 30-minute model. And then with, this is actually the chart you're looking at here is the 3-minute chart. And so this is like between 7 and 12 30-minute candles from the swing low, and then I used my model number, I used a 3-minute model number 1 to get long into those highs. So really fun. I don't know. It's just like it satisfies a need that I have I'm forced to be a scalper. I can't swing trade on the prop firms. And so I'm forced to do stuff like this where I'm forced to identify. So here's the initial range. This is like candle number 1 of a CRT, bearish. And then we have bullish, a teeny tiny bullish candle, and another teeny tiny bullish candle, and another teeny tiny bullish candle, all the way up into the key level. And then this is the pound, so we don't actually get to the key level. There's an SMT on early Thursday. But yet you don't need to have a perfect kiss of death into your second target. You can target any one of these highs, any one of these opposing range highs in your pause CRTs, and you can even target highs within. So there's my it's this one, I think. Anyways, but yeah. So just to review, pause CRT scalping gives you many opportunities during an accumulation or manipulation phase. You need to use your lower time frames and look for stuff like the SMT with correlated assets. I recommend that you only use, recommend is spelled wrong, I apologize. I recommend that you only use the kill zones because you're having lower both expected and realized volatility, right? And then the other thing is, check this next slide out. And indicators don't belong on charts, but like this is a kind of a quasi indicator. If you go into the trend line on TradingView, there's this thing called a linear regression trend line, and it does a linear regression, which is something from old school statistics, like parametric statistics, and I think even before parametric statistics, actually, linear regressions. But the idea is you have a envelope. No, it is parametric because the distance between the median, the mean of the rising trend line and these outer lines for the envelope is based on the standard deviation. But anyways, pause CRT markets travel linearly, and they do these little gyrations within the so the distance between the blue lines, the upper blue line and the lower blue line, in statistics you call that the linear envelope. And so what you do if you're pause CRT scalping is, obviously you don't really want to be fading the pause CRT. That's a way to get super frustrated and want to tear out all your hair and just get whiplashed out, get ground out basically. So never ever counter trend trade the pause CRT. You're not going to get anything. That's like squeezing blood out of the stone. But if you're patient and you're on the lower time frames, you can have many entries within these pause CRTs. And so another reason why you want to trade the pause CRT, not in the deep discount for bullish and not in the elevated premium for bearish, is pause CRTs have what's called heteroscedasticity. And here, let me. Anyways, yeah. So I wish I could draw this. Wish I could draw this on here, but basically, what heteroscedasticity is, that's another concept from statistics, is they start out with very, very low variance. Like it's just so little volatility. And this is something that I've noticed like over and over again when I look at pause CRTs, because I stare at a lot of pause CRTs because I'm waiting for them to finish. So like pause CRTs is like, if you're only trading the 2023 model on the higher time frame, you're like you're like waiting for Godot on your bench. You're waiting for the bus to arrive. You're just twiddling your thumbs. And so when I'm looking at these, I'm like noticing, okay, it's very, very low variance, and then it starts to range, and then the range expands and expands and expands. And so the moments where it tests the linear envelope are few and far between in the very beginning, but then they increase and they increase and they increase. And you're slowly getting more, rising megaphone pattern, essentially, a rising megaphone pattern, if you're familiar with that. But yeah, a rising expanding range is usually the hallmark of the end of a pause CRT. And so when you get a good, like, deeper cut into some rising trend line liquidity, then it's about to be finished. You got to start looking at the key levels. Okay, let me show you guys Thursday really quick. I don't actually have a PowerPoint slide, so I'm going to go back to Brave. So Thursday, the ideal trade was to forget about trying to scalp long. And the ideal trade on Thursday was, it manifested itself on the 8-hour chart, and I'll show you. So the euro was the one that tipped you off for the ideal trade to be had on Thursday. And Thursday is like this pre-market manipulation trade to get the longs that bought up here out of the market, because the longs that bought up here are actually correct. Like if they bought here, they would have finished the week in profit. So Thursday was all about juking those guys out of the market. And the other thing Thursday was about was to create the sense that this entire range could potentially be reversed. So in other words, to induce aggressive bears and to say, and bears that might be thinking, oh man, NFP is going to be hawkish for Fed policy, and that's going to be bearish for the euro, and traders are already front running it, and so I'm not going to let them front run me. I'm going to get short because I know exactly how Friday's going to turn out. And so what it ends up manifesting itself as is, in the 2023 terms, it manifests itself as an 8-hour model, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. And the pound gives you an SMT. So the pound, when the euro is manipulating lower, so that's actually where the pound is. It's that Thursday 9. I'm sorry, it's Wednesday 9 a.m. Wednesday 9 a.m. Oh, so I think I might have. Yeah. Anyways, wow. So the Wednesday 9 a.m. Which was that candle right there. Yeah, which is still an SMT, a pretty deep SMT between the pound and the euro. Yep, so a nice deep SMT, well, that makes a higher high, that makes the lower high. This is a new week opening gap. So we stab into the new week opening gap. I mean, like, if you're a bear, I mean, like, you're like, oh, I can't wait. Like, I'm in my trade. It's already Thursday, and I'm like, I already got the trade going on for my Friday distribution leg, and it's going to be a catalyst, right? But it's like, nope, that's not how it happened. And I can show you why when I review the NFP. But anyways, you should be short. You should be scalping short. And here's the cool thing about this is the model Am I on? I'm gonna double check my streaming software that I actually. Okay, good. Okay, so you should be short Thursday, and you should be thinking to yourself, I just got an 8-hour model, and 8-hour model is going to need, just doing the math, a 30-minute confirmation. And so here is your 30-minute classic Romeo order block, right? So a large, fat, up-close candle, a bearish FVG. You wait a little bit for the candle to retest, and there it is during Asian Open, which is 8:30 p.m. Eastern Standard Time. That's when you get your beginning of your distribution lower. It's a great trade. We hit the first target. We hit the 50% of the range commandingly during Thursday's London close bar, the 11 a.m. bar. Really great 8-hour 2023 model, 8-hour CRT, you could call it. Really, really great. So here's the thing. The model timed out. Like, if you are strict with this model and you tell yourself, the signal that I got up here during the Wednesday NYAM session, and that was confirmed in the Asian session of Thursday, which was Wednesday night, that signal is only like quote unquote good for 24 hours, which are 3 8-hour distribution bars. And then at this point, you need to reassess. And so we distribute lower, and then we pull back, and we close above this low. And I get it, it's not a swing low, it's just a candle low in the middle of the range. But this is the model here that then becomes the entry for NFP. So in other words, we hit the equilibrium of the range that we're attempting to turtle soup on the 2023 model, and at this point, which you don't really have a lot of time, you literally have this candle and the very opening of you have so these are 8-hour candles, so you do have about 7 hours. So I guess it's more time than it looks, but you have to decide. You have to flip your bias quickly in order to catch this one correctly. And so I'll show you how I flipped my bias going into the NFP now. So we'll go back to PowerPoint. NFP. So again, this is the setup. It's the same time frame. 1, 2, 3, 4, 5, 6, 7, 8, right? Actually, so I guess it's slightly lower time frame, like considering, okay, well, this candle could be the origination candle, right? And then you get 7, but it's the same, it's more or less the same time frame. I mean, I guess if you really wanted to like align, you could look on the 6-hour chart or maybe the 4-hour chart. Anyways, so let's go back to the euro really quick, and I'll show you what really confirmed it for me was this low right here. That's the start of the 8-hour candle, that's the low of the 8-hour candle. So like it opens, it forms that low. That's such an awkward little candle. So of course we take it out. But then look at this price action. Like this price action in the euro does absolutely nothing. And then we get this little, it's like the most accumulative of accumulative. Like the volatility has died down to like nothing. I mean, it's rivaling this right here, right, in terms of just inactivity. And then we get this little manipulation lower in this expansion, and then another teeny manipulation lower. And talk about protecting your stop losses. Like, into the news, there's nothing that gets taken out. But the pound, meanwhile, in the pound, it's just SMT, 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 because the pound dramatically expands lower into the breaker. So the pound gives you a breaker entry. And then even within like the actual like candle itself, the pounds, you know, like I had two positions open, so I'm watching it like between like, you know, that 8:25 a.m. in the last 5 minutes, and I'm like, ooh, wow. So I actually got I got in here with the pound, and I'm like safely in, but it's just, yeah, it's interesting. With the way that the SMTs, like even in the last 10 minutes before the news release, you can have SMTs forming. So yeah, so that's the thing that happened within this really tough to trade week. I think this was a tough to trade week just because it was so accumulative. Is you had an 8-hour bearish turtle soup in the pound and the euro, and then it quote unquote fails because it only hits the equilibrium of the range, and then you get an 8-hour model turtle soup of that 8-hour candle, and this becomes a propulsion order block. Even though there's no like FVG after bullish FVG, this is a propulsion order block, which means that we could trade back into this because now we have our bullish FVG on the 8 hours. Yeah, so that is NFP. Tell you what, why don't I go into Brave a little for a little bit longer, and we can like go and jump around on different time frames, because I think NFP deserves a better view. Oh yeah, so if this is an 8-hour model, then our confirmation's on our 30-minute. We're looking for 30-minute confirmation. And I'm going to tell you, we don't really get so if like this is the key level, this is the high that broke the low on the 30-minute time frame. This is our confirmation in the euro. Like we get it there. So we get like you close above the high that broke the low, right? Not in terms of like a market structure shift. I guess it is also a bullish market structure shift, because if this is the lowest low, right? Yeah, it's so rangy. It's just so rangy. But yeah, that's the candle there that gives you a bullish confirmation. That candle, you don't see that candle form until after the pound takes out that low, by the way. It's just such a funny divergence between the pound and the euro. It's like the pound like expanded lower into into sell side, whereas the euro is actually expanding higher. Like, so not only is it just like stuck in a range, it's like taking out liquidity here. So it's like flipping signals, like either way. Like, I could just picture a novice trader being like, oh man, like if that one spot 1535 gets taken out for whatever internal liquidity reason, then I'm getting short. And it even gives you like this nice wick and everything. It's just so sad. While the pound's like expanding lower, and you're like, oh, and then like look at what the pound does. Like the pound it retraces higher, and then it gives you like, when the euro is giving you that false lower time frame signal to get bearish, the pound's giving it to you as well within a little fair value gap and everything. It's so cute. It's like such a cute little manipulation. Terrible. So like, how do you avoid getting manipulated like that? Well, you need to keep that 8-hour perspective in mind. I think the pound is a much cleaner model too, because so obviously it's not quite a swing low, but that's an origination candle, and then you have 1, 2, 3, 4, 5, 6, 7, 8, 9. So on the 9th candle, so obviously you're looking between the 7 and the 12. Then the pound wants to take out this high, and it's like bang. That's the other thing about these news events, is the manipulation candle is the distribution candle, because of the tightness of the range headed into it, and then because of the explosive, quote unquote surprise of the news, even though it's not a surprise for the market makers, it's a surprise for the economists, the board economists, and the retail traders. So following with this model, even though we hit our key level, we are still entitled to 16 more hours. I'm sorry, 8 more hours. We're entitled to 8 more hours of distribution. Actually, no, because if this is a manipulation candle, then we have a full 24 hours of distribution that we're entitled to. So in other words, this is actually distribution candle 1, even though it's a bearish candle, which it happens. I don't know. I sound like a crazy person. So and that's why, and I'll get into this when we do the Sunday video, when we do the week to look ahead. But I'm like really bullish on foreign currencies right now, and I'll show you a bunch of reasons why on Sunday's video. So, anyways, thank you for sticking with it, and boy, I would be surprised if anybody got to the end of this video. It's just been a huge ramble the whole entire time. But it's helpful for me to crystallize my my own learning and my own approach to the markets. So good luck trading next week.